Market cycle top in, global crash imminent in markets is what a lot of people want you to believe. In fact, for the last 18 plus months, there's doom and gloomers out there saying and persisting and trying to share data that's indicating that the markets are about to crash. But what we just saw this week, a lot of people make you believe that it has something to do with the yen carry trade, with the interest rates in Japan. But we're already seeing in markets that we have that capitulation has already been in place. They've changed their perspective, and the Bank of Japan, we've seen the markets rise there absolutely incredibly. Now, in addition to that, what's going on with markets? Well, if we're looking at this, what are we really seeing? We're seeing a retest of previous price action market highs on the S&P 500, while Bitcoin has just been consolidated where at previous market cycle all-time highs. This is all the while having huge new capital inflows that now have access points to Bitcoin. We can see that the Bitcoin spot ETFs from BlackRock and Fidelity both hit $10 billion in assets under management in a matter of weeks, absolutely shattering the record of any asset in the history of any asset ever. That screams appetite in this market. Now, the important thing to consider right now with this market cycle pullback, Peter Schiff will have you believe that the Bitcoin market cycle top is in. However, when we're looking at this, yes, we're seeing a strong correlation of directionality of traditional markets and Bitcoin. However, this huge impulse on traditional markets was due for a correction of some type. As it stands right now with the current structure, we have not broken anything other than retesting previous range highs, and we're actually seeing a large impulse back to the upside. In fact, when we move on with this, we also see the fuel for further bullish action to the upside just broke to new highs. That is the global liquidity. We see it just breaking out past new highs, and all indications are sometime in the middle of September following the FOMC meeting. We are in the middle of an election cycle year, which is also indicative of doing anything possible to pump the markets. Now, does that mean the money printers are going to be turned back on? Some would already argue that that's happening, and sort of stealth QE, quantitative easing, with this $46 billion in buybacks in the market. So there's liquidity injection already starting to come in. We see the People's Bank of China also turning on those money printers, seeing that increase in liquidity in markets. All the while, we see a fairly insubstantial move in markets, relatively speaking, in previous cycles, if you compare it. Now, what am I talking about? If we come here to the weekly chart on Bitcoin, we just got the first move that broke this 20% move that we've seen rinse and repeat regularly in this market cycle. We just got a 33% move to the downside from this market cycle top. All the while, price action is just consolidating at previous all-time high. Very similar to what do we see right here, this consolidation before continuation. And when does this happen? After the Bitcoin halving. Now, what I want you to pay attention to is 161 days post-halving is when the price action truly exploded. Similarly, if we look at this last cycle, 161 days post-halving, market cycle exploded higher. What are we at right now? We are but a measly 112 days post-halving, which would put 161 days, if it's anything similar, right around the middle end of September, right in line with where those rate cuts will likely happen. Now, in addition to all this, we just had this huge sell-off, which also saw a near record number of coins sold at a loss. That peak fear moment, similar to actually outpaced what we saw with the FTX collapse, also outpaced with what we saw with the Chinese mining ban, which actually started the top end of that bull trend back in 2021. We have more people selling at a loss. Meanwhile, coming back to the chart, looking at this weekly candle, look at how hard the bears tried to bring this down, only to have it rocket back up. In addition to all of this, this trend line has been now support, resistance, support, all the way back here into 2017. And some would argue this trend line would actually go all the way back here to 2013. We're just testing a multi-year, basically decade plus trend line finding support, washing out those weak hands. Now, along with all this, we also see, is it a market cycle top? Well, these long-term holders have bought up $23 billion worth of Bitcoin here as we consolidate at previous all-time high, while we have all these new capital inroads and access points and new supportive clarity within regulation, having these Bitcoin spot ETFs available to traditional markets. We're seeing pension funds. We saw an incredible number of institutions and corporations adding Bitcoin spot ETFs to their assets under management. In fact, not 1%, not 2%, in some cases 19%, in some cases 23% or more. And all the while, what we're seeing right now is all ahead of these 330,000 financial advisors in America starting to push the Bitcoin spot ETFs to their clients. That is tapping $100 trillion worth of wealth. So let's be conservative. 1% of that would be $1 trillion of new capital coming in just buying the ETF. If we get 2 or 3, then of course that's 2 trillion or 3 trillion. It's yet to be seen what's going to come in here. But the point being is when we're looking at everything going on in these markets right now, and we see that buying, and we understand that by the ETFs alone, we've seen 51,104 Bitcoins being bought, the demand taking out of supply. Taken out of available supply. Meanwhile, yes, there is inflation in Bitcoin, but in all of July, there's only 13,950. And this inflation is programmed every 210,000 blocks. Every block's about 10 minutes. But the inflation is agreed upon on every Bitcoin miner on network. Everybody's participating. The Bitcoin network as a whole is essentially audited every 10 minutes, every time these miners compete to mine and confirm a block. And every 4 years, which is about 210,000 blocks, which is about 4 years, then we have these mining rewards. These are rewards to miners confirming blocks. These mining rewards get cut in half. It's exactly the opposite of what the US dollar is. So when we're asking, have we topped in this market cycle, when right now we're getting the global liquidity turned back on? What we see right here, global liquidity turned back on, inflating. This is right as preceding this massive move up. Here's the FTX collapse. Price action went sideways, but what front ran it? Global liquidity up. And what did we see after that? A year plus of just upward price action with small corrections along the way. Similarly, global economic shutdown right here. Having happened, and then what happened? The global liquidity absolutely started pumping into the market, preceding a massive uptrend in Bitcoin. So the question right now is not, is the market cycle top end? It's asking yourself, do you understand supply and demand? Knowing that there's a fixed total supply of Bitcoin at 21 million, that there's more demand, and it's only becoming exponential right now in regards to people, the appetite for Bitcoin. And we have a limited supply and it's being reduced off of exchange all the while as this is happening, considering that the rate of adoption of Bitcoin since its inception, overlaid with the rate of adoption of the internet, Bitcoin is outpacing the rate of adoption than the internet, which is suggesting by 2029, 2030, we will be over 1 billion users. That's about a 5 to 10x, depending on how you calculate. So let's call it a 8x from where we're at right now on user base on Bitcoin. Going back to that supply-demand dynamic, are we at a market cycle top? Absolutely not. The indications do not suggest that whatsoever. And so lastly, when we're looking at the price action here, zooming in just a touch, we are coming into that 160-day mark, middle of September. We had a massive washout. We're coming right back into the zone. These are the zones I'm watching. 50K, which we just saw as basically a local bottom here with the bulls eating this up. If we're able to clear $61,000 and make the price action come back up, 70,000 is going to be an incredible area to break through, which is going to be gateway to that next leg to the upside. So the question right now isn't, is the market cycle topping, whether it's traditional assets or Bitcoin and crypto? It's what am I doing to protect my future? Because we're seeing the money printers turn back on. We're in an election cycle year. All indications with Bitcoin specifically are that there's more and more and more exponential demand coming in, while we understand that the supply is limited and only being reduced over time as these Bitcoin are being moved off of exchange into private holdings. My name's Kellam, here with BitLab Academy, contributing content creator for the street. I hope you all stack into the future. The market's getting exciting. I'll see you on the other side.